some big news over the weekend from one stock that's been trailing the market. It's just up 7% this year compared to a 23% gain for the S&P 500. Its CEO is 89 years old. There's no clear succession plan. And the company just announced a record pile of cash. Do you know what the stock is? Berkshire Hathaway.
A slow,
Guess that. You're right. Warren Buffett's company revealing over the weekend it is sitting on a record $128 billion in cash. So lagging the market, sitting on a boatload of cash. How do you feel about Berkshire Hathaway? Dan.
Well, first things, it's interesting. We talk about the XLF all the time. It's the largest holding in the XLF. And it's one of the reasons why that thing is actually performing the way the market is, despite some of the biggest names, the bank stocks, doing really well. I mean, listen, I think this is a really interesting situation. This guy has done the best things during crises. I think he probably wishes that we'd have some form of crises so he can get all those warrants and all that stuff that he does. I think he probably has a harder time investing in big companies right now. We could use plenty of examples, Exxon, IBM, over the last few years.
If I had described that company and said to Guy, does this sound like a company that you would invest in? What would you tell me?
It's interesting, right? I like if you didn't know the name of it.
You didn't know the name of the company, but I told you all the underperforming the S&P 500. CEO's 89 years old. No clear succession plan.
Age.
If you didn't know.
Age notwithstanding, I'd say no, probably not. There are probably better places to be. But the bigger question, and what we're going to delve into now, is why? What does he see that's having him sit on a record amount of cash
and not buying a lot of his own stock?
Exactly.
That's the other thing. What kind of signal does that? The amount of stock that he's bought is less than what the amount Jamie Dimon has bought in J.P. Morgan in 1 quarter.
So are you asking us how to spend the money yet? I'm trying to, if we get into the punch.
Where are we at?
I want to answer this the right way, Mel.
Have I said to you, how would you spend, Tim, $128 billion?
No, it's funny, Mel.
Have I said that?
Not yet. No, okay.
That.
All right, I'm on hold.
I've not said that.
I'm on hold. So why isn't he buying back the companies that he owns?
Does that send a bad signal to you?
Look, this is a man who at some point shows tremendous discipline, though, and I think if he said, I'm waiting to buy at a certain level, I think, that makes sense to me. I also think this is a guy, Dan pointed out, I would emphasize, he does not like to overpay for anything, and I think he's got a history of trying to buy things at cheap levels. We'll see.
Okay. Now, I am not asking you what you would do with $128 billion in cash yet. We want to put that pile of cash into context first.
Okay.
That amount is bigger than the market cap of 2 Teslas put together. It is more than the GDPs of over 2/3 of the countries in the world. And it is enough to buy one of the most expensive castles in the world. In case you didn't know which that was.
That would be the
Ireland's
Ashford
Castle, almost 1,900 times.
Castles.
So that got us thinking. If you each had $128 billion, what would you buy? I'm asking that question now. What would you buy? I'm going to start with Guy.
Does the Ashford Castle come with Simpson?
That's good. I love the laugh track, too.
Cracking himself up again.
I think that's one of the guy's best jokes ever.
No,
better than Pinot Noir.
All right, so I'm going to answer the question.
Yes.
I had that was just hanging there for me. I'd buy the following. I'd buy Biogen because if they get Alzheimer's right, the stock will double. It'll probably cost you $65 billion-ish. And I'd buy Newmont Mining because Tim said something earlier about the U.S. dollar weakening. I still think gold's going higher. That'll probably cost you $45, $50 billion. You have a little money left over for, you go to the fair or something at Ashford and Simpson Castle.
So can I tell you what I would do?
Yes,
I would make a new media and services, a mobile services company. I might even call it the We Company to compete with WeChat, but this is for
The We Company is WeWork.
Well, here's what I would do. I would buy Twitter. I would buy Snap. I would buy Spotify, and I would buy EA. And I would think about what WeChat does really well and kind of figure out what a payments thing. I'd put all those things together. Those people over there, they care about the services. They don't really care about the hardware as much anymore. And then I'd kind of recruit a Mark Cuban to run the whole thing. Maybe throw in a little Pinterest, get a little e-commerce.
How do all these things combine, though?
Combined with the premium, I think you get to 130 and you get all these guys. Listen, somebody's got to compete with the Apples and the Googles of the world, and I think it's got to be somewhere else.
All right. You jumped the gun. I'm not going to use
Oh, snap.
There you go, Tim. What would you buy?
Doghouse.
If I were Buffett right now, the 2 stocks that are already in his portfolio that I would just take the entire stocks out would be Delta, and then I'd go to DaVita. And the reason I say that is you're talking about 2 different companies that are obviously in different worlds. He'd have to sell the rest of his airline stocks to be able to do this. That provides him a little bit more cash, so he's not even spending as much. and you're talking about great free cash flow, and you look at PEs that are very tolerable. I look at DaVita. This is a name he already owns 25% of the company. Why wouldn't he own the entire thing? And I think it makes so much sense because great free cash flow, trades at a very low multiple. It is the Buffett style. And when you looked at that chart of Berkshire, I think the big thing when you look at that is he's looking for a dumpster fire. He wants there to be blood in the streets to buy, so he's got his 128 million just waiting, billion waiting.
Interestingly,
Yes.
we ask you all separately what you would
that's
buy,
what we
and
do.
yet you and Pete both said Delta.
Yeah,
Wow.
so I agree with Pete. First of all, 36 cool billion takes you Delta down. It's the best airline right now operating in the U.S. It's arguably the best value for the money, 7.5 times trailing, 8 times forward. He loves transport, so keep buying Delta. Look, I have to go back to Heinz Kraft. This is a company that he bought at $50 billion. It's now trading at $36 billion. You guys can do the math. I'd buy half of this back right now. I know he says he doesn't want to chase this thing, but he's someone that owns for 10 years, and this is someone that I think ultimately believed in those brands. This is someone that doesn't stray too far from his knitting. And finally, back to Apple. Again, think about the portfolio he holds. Why not add to a core holding with a company that continues to re-rate? Look, he loves healthcare. He loves insurance. They're getting into wearables. This is a place Apple, I think, is going to be a major part of. And I'd put $50 billion in the bank and wait for that bloodletting that you guys are talking about. And I'd be ready.